Think your accounts payable process is airtight? You might be leaking money and not even know it. Accounts payable mistakes are quietly draining organizations, sometimes of millions, without setting off an alarm. And here's the kicker. Most teams have no idea it's happening. These seemingly small oversights are like slow leaks in a massive tank, silent, invisible, but deadly to your bottom line. In this session, we're going to take a look at 3 of the most common accounts payable missteps, explore what you think is happening versus what is actually going on, and share best practices that organizations use to protect their cash flow, vendor relationships, and more. Whether you're a CFO, a controller, an accounts payable manager, or just someone who works in accounts payable, this is your chance to review your processes, sharpen your defenses, and walk away with some actionable strategies to tighten controls, prevent fraud, and maybe at the same time boost operational efficiency. We're going to look at 3 of the most common yet dangerous accounts payable mistakes. Chances are at least one of them is happening in your organization right now. So let's take a look. Mistake number 1, not verifying the accuracy of every accounts payable invoice. What you think you're doing, think you review all your invoices before payment, that your team knows what to look for, and that they even use the three-way match religiously, you hope. But is that enough? What may actually be happening? In a very few cases, processes assume, incorrectly of course, that the approvers are actually verifying that the invoice is correct before they approve it for payment. But you say, you understand that really happens, and your team uses the three-way match to ensure pricing and quantity are accurate. So you're good to go. Your team isn't letting anything slip through, right? Not exactly. Yes, they are verifying price and quantity, but what about everything else? One company lost $176,000 over 6 months in freight overcharges, not because of fraud, but because everyone assumed someone else had checked it. If freight is included, are you supposed to pay it? Or does your agreement call for the supplier to pay it? What about customization fees and the millions of other fees that sometimes show up on your invoices? Is your team verifying that, yes, indeed, they are supposed to be included and you are supposed to pay them? Or should the supplier actually have eaten those costs? Also, and this is a big one, especially if some of your payments are being made outside accounts payable, is your team or whoever's making the payments closing out the purchase orders and receivers as soon as the payment is made, not the next day or at the end of the week or even worse at the end of the month? For if they don't, there is a decent chance that one of those odious second copies of invoices will slip through. Best practice. Absolutely use the three-way match, automated if available, but verify everything else and flag discrepancies instantly. Make sure you use best practices across the board. Now, would you give one of your employees the keys to your office, your safe, and your bank account information? Not likely, but that's exactly what some companies do, and they don't even realize it. Let's see what I mean in mistake number 2. Not employing strong internal controls across the entire accounts payable function. Now, here's what you think they're doing. I can't tell you how many times I run into this one. The company shows me their controls across the board, and then they're really pretty good. They have appropriate separation of duties, which is not easy to do with accounts payable staffs getting smaller and smaller, and they seem to have the appropriate controls in place. What actually may be happening? The truth usually eventually comes out. One person has access to everything so that they can pitch in if the backlog gets too big. And this is a noble reason, by the way, but not sufficient to allow for this type of oversight. Typically, the person who has this access to everything is the accounts payable manager or the controller, or sometimes an accounting manager who is operating as the accounts payable manager. If you follow the story of the fruitcake fraud, and yes, that's what they called it, and I'll put a link to it in the description, you know that this is exactly what happened in that particular instance, and it nearly bankrupted the company. The culprit? that nerdy trusted controller who'd been there not forever, but I forget now, it was either 10 or 20 years. This dramatically increases your fraud risk when one person has access to everything. For when there is an internal fraud, guess who invariably has committed it? I'm sure you've guessed by now. It's that long-term trusted employee who has overarching access to just about everything, including, as it turns out, your bank account, although you may not have realized that. The other shortfall occurs when internal controls are not immediately updated in response to new frauds, and I mean immediately. Best practice: regularly review your internal controls to ensure they are current and that you have appropriate separation of duties, which means no single person handles more than one part of the procure to pay, and obviously that no one has access to everything. Now, hit the like button if this has made you think differently about your AP processes, your accounts payable processes. And if you're watching on your phone and you see that hype button, it would mean the world to me if you would click on it. Mistake number 3, not verifying change of bank account requests. What you think is going on. Most organizations will tell you that they confirm all email requests for changes to the bank account number with the vendor. Their policy and procedures manual is updated reflecting this process, and their teams have been trained to verify every last request. But are they? What may actually be happening? And in fact, this is what might be happening most of the time. The emphasis here is on most of the time. They're doing what they're supposed to do. But fraudsters know they have the best chance of getting an email through that is not confirmed if they send it at a time when the team is under pressure. So they will time their phony email change of bank account requests to come in at the end of the month or the end of the quarter or right before a long holiday weekend. In other words, at a time when everyone is overworked, rushed, and trying to get out of the office. What they are hoping for is that the processor will think, every time I call to confirm these requests, they're always legitimate. So they think, I won't be bothered with this one. Then they go ahead, make the change, and they live to regret not having done the confirmation. A few really slick thieves have also spoofed phone numbers and or voices to make the change. AP teams should confirm these calls, but occasionally they'll be convinced that they're talking to a legitimate supplier, maybe even recognize the voice, which is both, and don't bother. And they live to regret it. And let's be honest, one mistake like this, it can change your career trajectory overnight, and not in the way you want. This mistake can be devastating, not only because of the money lost, which is significant, but a number of people have lost their jobs when this has happened, and they were the person who should have done the verification of the information but neglected to do so. Even if they don't lose their job, this is not a great career move. Also, and we rarely talk about this, but even if the person doesn't lose their job, their self-confidence takes a major hit. Best practice: always verify bank account changes using existing vendor contact information on the file. If you don't have updated information, start with the general phone number on the company's website and work your way to the right person from that. And yes, it is time consuming and annoying, but not nearly as annoying as the fallout from sending a large sum of money to a criminal that you can't get back. These verification practices should be across the board, regardless of how the request was received. So mail request, phone request also. And if you can't verify, like let's say you can't get someone on the phone, don't make the change. It's one of those situations where it's better to ask for forgiveness than have to explain that you sent money to somebody and you can't retrieve it because you sent it to the wrong party. Now, before we wrap, if you're thinking, this would never happen on my watch, remember, that's exactly what everyone says until it does. Have you noticed how many of these mistakes can be avoided by painstakingly using invoice best practices? That's why we put together a rundown of those best practices that you can review right now by clicking on the link that has appeared on your YouTube screen and is in the description. Good luck.